Hey everyone, welcome back to the channel, your number one source for income-oriented investing, how to generate passive income from a diversified portfolio of high-yield funds. Speaking of diversification, there is an asset class in particular that doesn't get much attention because it's considered more boring. It typically gets attention when everything's falling apart, right? It's also considered one of the best hedges against inflation, a flight to safety asset. Of course, I'm talking about gold here, right? So whether you agree that gold is a good hedge against inflation or a good asset class, that's up to debate. But what I feel, or what I really know for sure, is that diversification is good, right? So gold could fit in any portfolio as a diversifier. I think it's always a good idea to have a diversified portfolio. But the problem with gold is, especially as income investors, it's very hard to get income because gold doesn't exactly produce dividends, right? You do have some gold producers, some of them have very small dividends, but it's not that much yield. So in today's video, we're going to check out not one, not two, but three gold ETFs that you could put in your portfolio, all managed by Horizons ETFs. And two out of the three ETFs that I'm going to cover are income oriented, thanks to the covered call strategy, of course. And there's actually one of the three that has an approximate yield between 11 and 12%. So very, very high yield. Of course, this could fluctuate with the stock price, but we're going to check out this ETF together so you'll see how you could add some gold to your portfolio and also get some really great yield off of it, whether you want the gold producers, whether you want the physical gold with some income, or if you just want to add gold and you don't really care about income. Horizons actually has you covered. Let's check out these three ETFs together right now. All right, everyone. So the first ETF, this is going to be the highest yielding one by far, is GLCC. Just a reminder, these are all listed on the Canadian stock market, everyone. These are Canadian listed ETFs that we're going to be discussing in this video. So GLCC is the ticker symbol. This is the Horizons Gold Producer Equity Covered Call ETF. So just like the name says, this is going to be gold producer stocks. And the first thing that will jump out at you is this great yield you see here right on the homepage, 11.40%. This is, of course, as of or based on the stock price on August 28th, based on if the most regular or recent distribution stays the same. So of course this will fluctuate, everyone, with the stock price, right? And we'll check out the distributions in a second. First, let's go over and review this ETF quickly here. So this is really direct exposure to some of the largest and most liquid North American listed gold producers. It's a covered call ETF. So it uses a dynamic, Horizons uses an active or a dynamic covered call strategy, which we'll check out as well. So this ETF is actually based on an index, everyone. So if you click on this here, the selected North American listed gold producers index, you'll get to this page. And if you actually click on index composition, you'll see all the gold producers in the index. And you'll recognize a lot of them if you know the gold producers. In short, I'm not going to go through all of them, but you have Newmont and you have Franco-Nevada, Kinross, Barrick Gold, of course. In short, this is really the big boys, the large cap, big gold producers or metals producers here. No small fry. Another thing to remember is that as of 2022, mid-2022, Horizons renamed, kind of rebranded their covered call ETF. So this ETF actually used to be called, or the stock symbol was HEP, right? HEP. Now they renamed this one to GLCC, but it's been around for a really long time. You see that it has 256 million in assets. This is actually the largest, or the covered call ETF from Horizon that has the most assets. Management fees, a very typical 65 basis point, very typical for covered call ETFs, with a total MER of 79 basis points. So again, you click on holdings, and just like we saw in the index, you'll see pretty much the same companies in the index. It's only the big boys, right? Newmont, Barrick, Franco-Nevada. None of the small junior producers here. So really the big companies, the big gold producers. And of course, what we're interested in is the monthly dividends. So Horizons, for all their covered call ETFs, are monthly distributions, and it's been 22 cents a month for the entire 2023. So 22 cents, right, times 12, you get the annual dividend rate, and you divide that by the current stock price. and you'll get the approximate yield. This yield, of course, of 1140 is based on the August 28 stock price. Of course, this changes with the stock price. So very, very high, nice yield here of way over 10%. You might be wondering, how are they generating such yield if the gold producers don't really have much dividend yield? Well, the answer is simple, everyone. It's covered calls. And what I really love about the Horizons website is that you could actually see the details of the covered call coverage and moneyness here. So you see that here, this is as of end of July, only just under a quarter of the portfolio has covered calls on it. And the average moneyness is 1.89% out of the money. So because gold producer stocks tend to be fairly volatile, the covered call, the call premiums are fairly rich, so they don't even have to do so much coverage. You see that less than a quarter of the portfolio here is covered with covered calls, which means that 75% or more, and of course this could change, right? Right now it's as of July 31st, but maybe next month it'll be 30% or whatever. But what I can confirm for sure is that the Horizons covered call strategy, they will never go over 50% coverage, which means by default, you will participate in, at the bare bone minimum, 50% of the upside of the gold producer stocks, right? Of the stocks inside the portfolio. But right now, as of end of July here, it's less than a quarter has covered calls on it. So that just goes to prove how they have rich premiums, good volatility, which is very good for us income investors who are harvesting the premiums with the covered call strategy. So GLCC is definitely going to be your highest yielding ETF. It is gold producers only, however, not technically physical gold, although gold producers, their stock price kind of follows the gold price, right? The higher the gold price, the more profits they make from mining. So obviously their stock prices go up. But let's compare it to another big gold producers covered call ETF on the Canadian market, CGXF. CGXF is pretty much the same concepts, same, very similar stocks, right? Gold producers with covered calls, similar management fees. The MER is a little bit lower here, a little bit less assets. However, one good advantage the Horizons one or GLCC has is that they are monthly distributions, whereas CI does quarterly distributions. But let's just check the performance for fun to compare the two, and but you'll see that they're pretty similar. So 1 year performance of GLCC, this is of course as of end of July. You see 24.82% total return. And the CI one here, 22.1. So similar, but GLCC is a little bit higher. Year to date on the CI one is 3.9. Year to date on the Horizons was 5.17. 5 years, 8.91. If we look at the 5 year here, it's 3.8. 3 year minus 5.9. 3 year minus 8.36. So very similar performance, I would say. And depending the time you check, it seems like GLCC is performing slightly better than CGXF, but it's pretty similar and it's a very similar strategy. So this would be a great ETF for income investors who want some gold exposure. They don't mind a gold producers exposure to add to the portfolio. Very, very nice yield. But what if you just want the physical gold? Look, they say, Adrian, I don't like the gold producers. I don't want to invest in the gold producers, the miners. I actually want physical gold and some yield. Well, guess what, everyone? Horizons has the HGY ETF, which is literally called the Horizons Gold Yield ETF. And as you can see, the distribution is definitely not as high. It's a little over 6% here. Again, this is based on the August 28 stock price. It's approximate here. But this one has no gold producers. This is literally correlated, like it says here, to physical gold. So if you look at what's inside of it, it's literally holding the GLDM ETF, and they're writing calls on that ETF, right, on GLD. So this is literally physical gold, everyone. It's a physical gold trust. So if you don't want the producers, you could get this one. And the management fee, I believe, is the same. Oh no, it's a little bit lower here at 60 basis points. The MER is 90, however. And if we look at the covered call strategy here, one thing that Horizons has confirmed is that they will never go over 33% compared to 50% on GLCC. So they'll never go over 33% coverage, which means, you know, 2/3 of the portfolio will do pretty much whatever gold does. If gold goes up, it will go up as well. So this is a great option if you know, you don't want the gold producers, which are a little bit more volatile. You really just want the physical gold. You want some income. You get a nice over 6% yield here with HGY. Very, very good option. Very unique ETF. There's nothing to compare HGY as far as I know. Physical gold with covered calls. Last but not least, if ever for some reason you don't care about the income, you just want a gold ETF, a physical gold ETF, Horizon has you covered. Horizons has you covered once again with HUG. HUG, this is literally the Horizons gold ETF. So this has no covered calls on it. It basically follows, you see here, gold bullion. It holds gold bullion futures. It basically will do or follow gold price. So that's it, everyone. You have 3 great gold ETF options from Horizons, all for different types of investors. If you're an income investor, you like high yield, you want to harvest rich premiums from miners, GLCC is definitely a great option. If you just want the physical, you could go with the HGY with some covered calls, which will never go over 33% coverage. And if you just want a gold ETF, you just want to put a 5% in gold as a hedge against a disaster or whatever. You don't care about the income. Horizons has you covered with the HUG ETF. So thanks for watching and see you next time. Don't go yet. A few reminders before you leave. Did you know that I launched a YouTube loyalty membership program where for only $3 a month, you could become a PII Inner Circle member where you will gain access to exclusive content, exclusive videos and live streams, as well as other perks and benefits, including a really cool weekly opportunity report. That's right. If you're interested, just click on the little join button next to the subscribe button to see what it's all about. Also, make sure to follow me on Blossom and download Blossom. It's a social investing app, which is really cool. You could share your portfolio, follow other people's portfolios, including my own. My username is Adrian_PII. So download it with the referral link below. Not only is it free, but you could actually earn cash by taking these really small, quick 1-minute courses. Really awesome. It's a no-brainer. Also, make sure to visit our website, passiveincomeinvesting.ca. That's where you could book a one-on-one private coaching session with yours truly, with myself, where you could ask me all the questions you want. All the information and booking information is on the website. Make sure to check out that video on the homepage there to see how to book a one-on-one properly. Also on my website, you could purchase my digital product, which I'm very proud of, the ultimate DIY investing package. This is a reference tool or a companion tool that will help you build your own portfolio. So it has lists of funds, it has sample portfolios, and it covers both the Canadian and US stock markets. And the good news is you'll only ever have to buy it once because it comes with free lifetime updates. And my plan is really to update the version every single year. So make sure to pick it up. Also, I have Questrade and PASSIV referral links below. So Questrade is the broker that I personally use, and PASSIV is the broker companion tool or assistant that I use. Really cool program, really cool software. So I have referral links for both of those. Questrade, $50 of free trades. And PASSIV, I have half off for the elite membership. If you're interested in the elite membership, and even if you want to start out with the free membership and upgrade to the elite afterwards, use my referral code so you could still get that 50% off. And don't forget that the elite membership of PASSIV is 100% free if you use Questrade. For social media, we have a very successful and big Facebook group, private Facebook group with over 14,000 members where we all try to help each other out. So make sure to join that group. Information is below. We also have Instagram where you could follow us or more personal stuff when it comes to our life here in Panama. And there's LinkedIn as well. So as usual, everyone, how do I leave you? Continue to stay safe, stay healthy, and of course, stay passive. See you next time.